Good day, Palm Beach. I hope you guys are doing well. I hope everything is going well for you guys. I am very sorry for not being as consistent. I actually got a terrible cold. I am still recovering. If you can even hear my voice, that I sound a little bit different. But I did take a wonderful trade when I came back from recovery. When you have a flu, you can't even be on the charts. You're having headaches and whatever it is, the case may be. But I am back now. We have this incredible banger trade that we took on Crash 900 that I'm going to be breaking down for you guys in today's video. Now, let's remove all this analysis so that I can explain to you guys what I was seeing, why I took this trade, and how you can apply the same concept that I use for your own personal use on the charts. Now, looking at it like this, right? Let's go into the higher time frames over here. On the higher time frames, you can already tell that we're bearish overall on the higher time frame. So usually what you do when you get something that looks like this on the higher time frames, you automatically already know that you're already in a selling cycle, right? You're in a selling cycle. So if we're to break it down, what you will notice is bearish momentum. And that's what we have over here, right? We have this bearish momentum over here. So now we can go down to our lower time frames. Lower time frames, there's consolidation on the hourly time frame. So I couldn't see anything until we got all the way down to the M15. Get down to the 15-minute time frame and you can see we have our setup. The one setup that we always take every single day. The same thing over and over again. Right? We have this protected high over here. So we don't expect price to break this area. But what was the first thing that I could see? I could see a sweep of liquidity right here. Our liquidity sweep right there. Right? Sweep of liquidity. Break of structure. Like we always do. Right? After we have our break of structure, what's the next thing that we get? We have inducement liquidity over here. Price is inducing sellers to take sells. We're not buying it. Right? After we get that, we get the creation of structural liquidity right here. Right? Now we have our structural liquidity. Okay, like I always say, when you have this, you're already 90% the way to making money. 90% the way. Right? Let's remove this. Okay. Structural liquidity is created. Now what are we waiting for? A second break of structure. And we get that over here. Very, very simple, guys. Very, very simple. Now what is the last thing that we're waiting for? The last thing that you want to mark out is your point of interest. Right? If you saw in the previous video me taking the entry, you could tell where my entry was. And I entered after I saw this right over here. Right? But before we discuss that, let's discuss this over here. Let's do a little recap. Sweep of liquidity, protected high. Break of structure, right? During your inducement liquidity, right? You have your break of structure. You have another break of structure over here. This is probably the main break of structure during your inducement liquidity, right? Then we have our structural liquidity over here. Then we have our other break of structure over there. Now what are we waiting for? We're waiting for price to get into our point of interest. How do we mark out our point of interest? It is the area between your liquidity sweep here, your sweep of liquidity, and your protected high, right? So this area between your sweep of liquidity and your structural liquidity, right over there. And also your protected high is included. So we can even say the area between your protected high and your structural liquidity can be your point of interest. But your main area of interest is going to be between your structural liquidity and the sweep of liquidity. Do you understand? So we're looking for price to get into that area, sweep that area and start to sell from there. And what did price do? As soon as price got into this area over here, let me draw this properly, more precise. As soon as price got into this area, what did it do? It gave us our first spike, right? You're entering right over here. That's confirmation. That was confirmation enough for me, right? Even though price came around and started to play a little bit around this area over here, our stop loss wouldn't have been hit. Because where do we put our stop loss? We put our stop loss above the protected high and give it some breathing room. So that if sometimes price can come and sweep your protected high but close back inside like what it did over here. As you can see, it came and swept a little bit, but it closed back inside. And this was more confirmation. I just already knew we were going to get our melt all the way down to take profit. And where is take profit? We are already approaching it. This is take profit right here. Simple and easy like that. Simplest thing in the world. Simple strategy, simple money. Right? If you're enjoying this video, you might as well subscribe to the channel. I will be dropping more free content like this for you guys. Drop some get well soons in the chat so that I can get well soon. And this is Palm Beach Traders signing out.